Hey everybody, this is Mitch Ferraro from F Street. I'm the Investor Relations Manager here. Super excited for today's webinar. I've got my colleague, my friend, Brian Gallagher here. He's also on the Investor Relations team and also works closely with our development team as well. So we're super excited to be here. We wanted to do this webinar today because we've been getting a lot of questions. We often get a lot of frequently asked questions from investors that are pretty typical, and it's a great way for investors to do due diligence and better understand what they're getting invested in. So we thought, hey, why don't we talk about some different things today that deal with the private debt fund and then also on our equity deals. So again, we're just super excited here. Brian, man, thanks for being up with me today. It's funny. So Brian's super tall. I'm super short. So if you see us kind of get out of the frame a little bit, apologize. But yeah, so we want to just kind of get started today with talking about, who we are. So we are a real estate investment firm. If you've seen some of the webinars that our owner and founder, Scott Lurie, does, he's always talking about planting money trees. Money trees are things that we plant, we grow, and then we use those trees to have cash flow every single month, every single quarter from our investors or from the investments that we do. Now, our main founders, who you see in this picture, is Scott. Scott's our owner and founder. Then we've got Josh Lurie, who is our one of our principals, and then Nick Young, who is also one of our principals. Just real quick, our team in general. This is our team in general here at F Street on the investor relations side. This is mainly on the investor relations side and the development side. We have a whole nother team that's purely dedicated to the Hard Money Co., which is associated with the private debt fund. As you can see, we have about $619 million of assets under management, founded in 2009. Again, we're just a real estate investment firm that really dives into some different verticals with the private debt fund. We do industrial development, industrial acquisition, and multifamily development and multifamily acquisition. All right. So kind of getting right into the investors submitted questions. Oh, by the way, Brian, did you want to say anything? Like say hi to everyone?
Yeah. Hey everybody. Appreciate being on here. If you want to flip back real quick, I do just want to touch on the equity side of the business. So this 619 assets under management does not include the private debt fund, which Mitch has been a critical piece, and we've grown that to a $100 million fund and growing today. So this is just the equity side of the business, as Mitch said. Assets we've acquired, projects that we've developed, and then this number is growing because we're still developing. We have projects that that have broken ground in the last few months, and then projects that are going to be breaking ground throughout the rest of 2025.
Yeah, absolutely.
So yeah, let's jump into the questions.
Yeah, absolutely. So we're first going to start with some questions. So when we sent out this webinar, we actually had some investors come in and say, hey, this would be really cool if you guys answer this. So one of the first questions is, how many deals is F Street working on, and what's your development team's capacity?
Yeah, it's a great question. And so, right now we're focusing a lot on industrial developments and multifamily developments, and these are longer lead times. So, deals that we're working on right now may not break ground for another, call it 6 to 12 months. And then on top of that, we're also chasing a lot of industrial acquisitions right now. So on any given week, we're sending out, call it 5 LOIs, letter of intent to purchase these properties. Now, not every LOI goes somewhere, but we're out here chasing these deals. And at any point in time right now, I believe we have 3 industrial assets under contract. So, at any point in time, we may have, call it between 3 and 5 under contract. And then we're always trying to, fill in our pipeline of deals with new opportunities that we're, looking for and finding every day.
Yeah, and I will also say too, on that side of the business, we do have trusted contractors that we work with on a development side. That we've used in the past. We have architects that we've used in the past. So we have a lot of resources and teams around us that allow us to do multiple deals at one time. And then also, obviously, from a funding perspective, we have close to 500 investors within our entire investments that we do. And then we also work with many different banks, local banks, regional banks that will fund these deals on top of what we're raising for those deals. So we do have some really good capacity here. We look to continue to grow, and it's actually quite fun to be around here in the office because we're always moving, and it's really a fun time here at F Street. All right, what happens if a deal underperforms How is downside risk shared?
Yeah, that's a great question. And I think that really boils down to what is our investment structure. So we have our LPs, which are equity investors, and then, F Street's principals, and F Street as a company is the GP, the general partner in these deals. And the way our deals are structured is the GP portion of the deal, where the GP, the general partner, what F Street and the principals, when we make our money in the deal, is on the back end of the opportunity. So our investment structure prioritizes two things: giving investors a return on their money, which is what we would call a preferred return, and then also giving them all of their dollars back. So on 99 out of 100 of our investments, you're going to see 100% of cash flows are going to go to pay off the preferred return and to pay back initially invested capital from the LP investors. So that's you guys, the investors in these deals. And until those two things are fully paid off and fully paid down, F Street as the GP doesn't, we don't make our bread in the deal. Yeah. So, the downside is if the deal's underperforming and it cash flows a little less, it's essentially taking away the amount F Street makes at the back end, but we're still prioritizing those investors on the front end of the deal. So, we hope these deals don't underperform. We underwrite a lot of contingencies, whether that's, interest contingencies in a construction budget, hard costs if costs go up a little bit throughout the 12 to 18 month build timeline for some of these projects, and then also soft cost contingencies, because when we're ordering third party reports and having environmental consultants come in and other geotechnical consultants come in, we don't always know exactly how much it's going to cost when we're making our budgets up front. But what we can do is put a soft cost contingency into our budget to help account for any potential overruns. Yeah. So between contingencies and our investment structure, we try to make sure our investors are in as safe of a position as possible.
Yeah, and I just want to point out one quick thing here. If it underperforms, this is where our principals, where Scott, Josh, Nick, these guys would be very much involved in an asset that was underperforming to figure out what else could we do to make sure we're hitting the benchmarks that we've set when we first underwrote the deal to get the returns that we're looking for. So that's probably one of the best things about F Street here is our team is very knowledgeable. There's a lot of experience. We have very sharp individuals that are underwriting these deals, and we know we have the resources to try to figure out if something was underperforming, what we could do to actually make that investment go back up to what we wanted it to be. So just wanted to add that to that part right there. How can I make additional investments, whether it's in the private debt fund or equity deals? So this is where I just really want to point out we've dumped a ton of time and resources into our investor portal. Our investor portal is super easy to use. Once you sign up at fstreet.com, and signing up does not obligate you to invest with us. It just gets you into our system. And once we have your accreditation verified, you can invest in any deal at any point in time as long as it's open.
And I do want to add to that, me and Mitch have actually done a similar roundtable format to this on our investor portal, walking you through kind of all the corners, all the different functionality, where you're going to find investment updates, new investment opportunities, tax documents, for every March and April. So we've actually walked through that, and you can find that at the F Street YouTube channel. So, if you ever have any questions about it, Mitch and I are always available to answer questions. And then we also have that video really walking you through, as Mitch said, we've dumped a lot of time and resources into the investor portal to make our investors have, the best possible, place for their investments to, be housed and be viewable and, allow them to, understand where they are in each of their investments.
Yeah. So if you don't get enough of us today, you can go check that out on our YouTube channel at fstreet.com, or just go to YouTube, type in F Street, and you'll see all of our different educational videos. But yes, the portal is super simple. There's an offerings tab. Right when you log in, at the very top, you click the offerings tab, and then every offering that we have is going to have an invest now button. You literally click that button, you'll sign documentations electronically, you'll let us know how you're going to get us the funds, and then we'll basically make your position inside your investor portal once we receive the funds. So super easy, either on the private debt fund side or the equity side, no matter what deal we have. All right. How can I invest using retirement funds? This is an absolutely great question. If you are looking to build generational wealth, this is a great way to do it, because obviously it's tax-free And you basically use what's called a self-directed IRA or a solo 401k. We use some great partners from the self-directed IRA companies. We use a company called Equity Trust. That's one of our main partners. Very easy to get set up if you don't have one set up. If you do have one set up, we basically work with your self-directed IRA company. Either Brian and I will work with them one-on-one because every self-directed IRA company is a little different. We'll work with any of them. So if you don't have something with Equity Trust, but you have Direct IRA or Entrust or whatever other one there is, we do a really good job of working with those guys to make sure whatever documentation they need, whatever they need signed, gets to them. And then they are the ones that typically fund the deals. And then when distributions happen, we literally send the distributions right back to the self-directed IRA company. So you're not touching that money. You're going to be able to flow that money in and out very easily. And again, we take care of a lot of that stuff to make sure that everything that is needed is getting to the self-directed IRA company.
Yeah, absolutely. And, we talk to investors, all the time, every week that, they've never heard of a self-directed IRA, or, maybe they stumbled into the concept of the self-directed IRA through us or, through other channels. And it's really just a way to unlock, as Mitch said, generational wealth creation. And it also helps you achieve the diversification that we always talk about. You want to have, stocks, bonds, and alternatives in your portfolio. And you can do that through the self-directed IRA with the funds that you've already been putting in there, for the 10, 20, 30, 40 years of, your working career.
Yeah. And I just want to make one last point because this is so important with the retirement accounts. So for the private debt fund, you receive a 1099 INT at the end of the year. Using a self-directed IRA account, you basically are shielded from that 1099 at the end of the year. Also, within the private debt fund, you can compound your interest. So this is a great way to grow your money faster, be protected from the 1099 INT at the end of the year. This can also be used on the equity side, but sometimes on the equity side, because you're receiving a K1 at the end of the year, and we typically do cost segregation studies, which we also have a number of videos that show what a cost segregation study is, but we forward accelerate depreciation, which helps you write off passive losses or passive gains against the passive losses on your K1. So sometimes, even though you may have a retirement account, it might not be the best vehicle to use in an equity deal with us, because sometimes a lot of our investors want those K1s to show the passive losses.
And if you ever have any questions on, hey, I have a personal account and a self-directed account, and I'm looking to, make an investment here and another one in 3 months. If you ever have any questions on, hey, which one should I use my self-directed IRA for, and which one should I use my personal account or my LLC or my family trust? These are all questions that, Mitch, I, and our whole team here are, can help walk you through and just lay out the pros and cons of each, because there's no one right solution. It's different for everybody, and every investor has their own unique investment goals.
Yeah, our goal is to give you guys all the options and then have you decide from the information that you're given. All right.
So we did just get a question in from the chat. How many deals do you have going on right now in any phases, such as due diligence, acquired, and under construction? Also, what is the 619 million assets under management number, total asset size, or total equity invested in the deals? So these are great questions. I'm going to take the second question first. So the $619 million number, this is the asset value of our portfolio. So this includes, now we have different deals in different stages, as the first question said. So we have deals that are under construction. So for those opportunities, we put the construction cost as that value. Now with real estate development, that value will be increased once the project is stabilized and completed and stabilized. Generally that's why we're developing, is because the sum of the parts is going to be greater than the individual. And so the 619 is appraised values, broker opinion of values, construction costs for the deals that are still under construction.
And that deals with multifamily and industrial.
Multifamily, industrial, and then a select other. We have a few hospitality investments, and some land investments as well. So there's a lot of different investments F Street's made over the years, a lot of different holdings. So it's kind of all over the the board there. But we went through and said, hey, what is the value of our portfolio, and that's the number that we arrived at, and it's it's growing every day as the real estate continues to appreciate.
Yeah.
And then how many deals total do we have going on right now? So I'll start with our deals that are currently under construction.
Yeah.
Right now under construction we have the West Bend Apartments, F Street West Bend LLC, which is the Emory Apartments, 105 units. We have F Street BD2 LLC, which is 156 units in Brown Deer, Wisconsin, also under construction. Now, those are garden style apartment buildings that you may have heard us talk about before, where one building is going to get delivered this month and then next month and the month after until they're all complete. So those are nearing the first building completion, and then they'll be completing throughout the rest of this year as tenants continue to move in. We have Summit Apartments Phase 2 in Oak Creek, 75 units under construction right now.
Yeah.
And then right now we're finishing out the equity raise for Summit Apartments Phase 2, which is 57 additional Class A market rate units to the Lakeshore Commons community. And so that's really just multifamily development. There's a lot more, industrial deals. And if you have any other questions about total deal flow, happy to go through that more in detail after this or, at the end of this Q&A.
Yeah, we'll give our contact information after this Q&A. You guys can email us, connect with us. Any questions that we don't get to today, just please feel free to reach out to us. We'll be happy to get you guys answered. All right, so we're going to try to run through these ones a little more quickly. So these are like the most frequently asked questions, the ones that we were talking about before were questions that came in before the actual webinar. So what happens after 1 year in the private debt fund? So after the 1 year in the private debt fund, your money is available to you at any point in time. So after that 1 year, all you do is make the request through me, Mitch at fstreet.com, or you give me a call on the phone and say, hey, Mitch, a year ago, I invested $100,000 into the private debt fund. I've reached the 1 year maturity date. I'd like those funds back. All we do is I make that request then through our accounting team. We do give ourselves a 90-day period to return those funds back to you after that request. But typically, if an investor is like requesting $500,000 or less, we're typically getting that back to them within about 2 to 3 business days. So very quick turn time on receiving your money back. But if you don't make that request, you'll just continue to receive the monthly interest payments, or it'll continue to compound, whichever one you have chosen, in the private debt fund. So there's nothing to do unless you want it back. And then once you want it back, we make the request through our
And Mitch, I'm going to throw a little bit of a curveball at you here, an unscripted question. How many investors, like what on a percentage wise, how many investors after that 1 year maturity choose to keep their money in versus say, oh, my 1 year's up, I can finally have my funds back? What's the breakdown there?
Yeah, that's a good question. I love curveballs. So I'm gonna hit one out of the park. So it's typically about 95%. About 95% of the people that are in the fund typically stay in the fund, and they either add more money or we see like people pull money out of the fund like when a life event happens, like they're going to go buy a house for cash, or they're going to buy the wife a new car, or kids are going to college. That's when we typically see people pull money out of the private debt fund. Reason being is because those people like that monthly cash flow every single month. It happens on the last business day of each month. All of it. Today is May 1st. All of our investors, including myself, I'm invested in the private debt fund. We received our monthly interest payment. So it's like clockwork. So people love being in the private debt fund. Good question. Yeah, awesome. I'm gonna throw you one. No.
So Mitch, F Street. So the hard money co and the private debt fund. They're the two sides of that side of the business.
Yeah.
So the hard money co is lending the money to the fix and flippers, people investing in single family homes and duplexes, and taking under market value properties and bringing them to a market value.
Yep.
So we're charging them 15% interest and 5 points on a short-term 6-month loan initially.
Yeah.
So if we're charging 15% and 5 points, how come investors are only earning 10%?
Yeah, this is a great question. Question I get all the time. People will say, man, you guys are making a pretty big spread of the 5% and 5 points. And yes, that is correct. That's what makes our business and F Street profitable. You want us to be profitable. I'll never forget the first time I saw Scott answer this question to one of the investors. And Scott bluntly just said, yeah, do you want us to be able to pay you the 10% interest every single month on the last business day of each month and have it be like clockwork? That's because we need to be profitable. For us to be profitable, we keep that spread of the 5% and 5 points, and we offer the investors that come into the fund They're 10% annual interest, and we pay them every single month. So that is why we keep the spread. It allows us to operate the business, pay the salaries, anything that's happening with inside F Street, that's what that 5% and 5 points is going towards. So that's always an often question, and you want us to be able to have that because you want us to be profitable. All right, how are investor returns structured? Do you want to talk about this on the equity side?
Yeah, this is a great question. So, each deal is different. We launch an investment packet when we bring a deal to our investors and, to the public. So we try to detail, what that specific investment structure is going to be. And I touched on this a little bit earlier in this investor roundtable as well. But so generally, it's going to be a preferred return. So that's going to be an annual percentage that you're going to earn on your money. And then the second to that is 100% of the cash flow goes towards the Class A LP limited partner investors until all of their preferred returns are paid back, and all of the money invested initially is back to them. So if Mitch invests $100,000 into a deal, he's going to get, call it 7% or 8% preferred return on that $100,000 annually. So if we're paying on a monthly basis, we're paying that first portion of that 7 or 8% preferred return. And then anything over and above that, we're paying down the initial 100,000. So the next month comes around, you might only have, call it 99,000 in the deal, and you're earning the 7 or 8% on that. And then all of the cash flow is going towards Mitch and the other investors until all of the preferred returns are paid, all of the initial capital is back in Mitch's pocket and the rest of the investors' pockets. And then we're going to hit some type of a cash flow split. Again, F Street, we are making money as well, but we are okay taking the back end of the deal because we want our investors to feel comfortable. We want our investors to be in the best possible position with these investments. So then once Mitch is fully recapitalized along with the other investors, then we'll hit a cash flow split. And that can be anywhere from 50-50. It can be anywhere from 65-35, where 65% is going towards the investors and 35% is going towards F Street. So, each deal is different. So, if you ever have any questions on structures that you see in our investment packets, just let us know.
And on the private debt fund side, it's very, very simple. It's through a promissory note that we provide the investors. As F Street, when we loan out the money out of the fund, we go in that first lien position on every single asset that we loan out on. That allows us, if at some point in time the borrower that's borrowing the money doesn't pay their interest payments, stops communicating with us, we actually have the right to foreclose on the asset and take the asset over. And then we provide the investors that are coming in. Quick note so you guys understand this, the investors that come into the fund are in an unsecured position because F Street is going into that first lien position. It's the way that the fund is set up. That way, if we ever have to foreclose on any single asset that we foreclose on, you as the investors don't have to worry about the foreclosures. We as F Street take care of all of that. Your 10% annual interest is never in jeopardy because the fund actually absorbs the foreclosures. And then we're able to just manage that asset. We have a whole REO asset management team that takes care of the foreclosure process. So you are in an unsecured position through a promissory note. And then that promissory note just gives the terms of the actual investment. It's going to be for 1 year. It's for $100,000. And then again, after that 1 year, you can have your money back at any point in time. So just wanted to make that clear that because a lot of investors will ask, like, what am I secured by? You are in an unsecured position, but we as F Street are in the first lien position on every single asset.
All right, we have another question from the chat. Are there development fees and or asset management fees that F Street takes prior to paying the preferred returns? These are great questions. Yes. The real estate development business, there is a fee portion to it. So, each deal is different. Generally, on a multifamily development, we might charge a 4% development fee. That goes into our our development budget, which goes through the lender and then gets, that fee, sometimes you get 50% of the fee up front in your initial construction loan draw, and then you might get a portion of it throughout the construction process and then a chunk at the end. And then asset management fees as well. Yes, we do take asset management fees, prior to paying back the investors, but these are, generally pretty de minimis, and they go towards, paying our asset management team, who is actually ensuring that, these properties are actually performing the way we, underwrite them and sell them to our investors because, it's the easiest part of the process is actually acquiring these properties. The harder part is, what comes after. You can buy an industrial building, but can you negotiate the new lease?
Yeah.
Can you have a good relationship with the tenant and take care of the building so that it's not a good 1 or 2 year investment, but it's a good 3, 4, 5, all the way, to 10 years and beyond investment. So these are all disclosed in our investment packets. They're all disclosed within, the operating agreement and subscription agreement that, our investors are signing on these deals. And, any questions that, you have on this, again, Mitch, myself, Josh, Nick, Scott, we're all available to dive deeper into these fees and really where are the fees going, why are we charging them, any more detail on any of that.
Yeah, again, great point by Brian there right at the end. This is all disclosed. This is in the investment packet before you sign all the documents. If you have additional questions on any of what's in the investment packet, you can reach out to any of us. We will hop on a call. We'll do a Zoom call, a phone call. If you're in the area, you want to meet in person, you come into the office, we'll do all of that. So just know that this information is all disclosed. We have to disclose it for the investors.
So we have a lot more questions coming in through the chat. Well, we love questions. That's why we're doing this. Frequently asked questions, Q&A forum with our investors. So, we might go past the 30 minutes that, we initially thought. The recording will be available on our YouTube channel. So youtube.com, you just search F Street, subscribe, comment on these.
Ring that bell. That's what all the YouTubers say. Ring that bell. I don't know I guess that means you get notifications.
Yeah.
Okay, cool.
But you can ask questions in the comments there and we'll get back to you. So, make sure you're always looking there, for any investor roundtables you may miss or anything like that.
Yeah, excellent. So how and when are investor distributions made? Very simple for the private debt fund. It happens on the last business day of every single month. If you start investing in the middle of the month, you're actually going to get your first distribution in that month for the prorated amount of days that you've been in the fund. You'll receive your actual first full payment in the following month, because that would be the first payment, first full month that you've been in the fund. On the equity side, we do multifamily, we do quarterly distributions. On the industrial side, we do monthly distributions, and that typically is at the end of the month.
Yes, correct. And then we have a new question in from the chat. As an investor in the private debt fund, you are in an unsecured position, but what recourse would they have if it were ever the case that F Street defaulted on making any payments to the investors?
Yeah.
So the 10% annual interest, last business day of every month, what happens if we don't hit that interest payment to an investor?
Yep.
And another question, have we ever not paid an investor an interest payment?
Yeah, so great question. So you would have legal recourse with the promissory note that you could say, hey, they owe me this amount of money. It would be a legal recourse, but you are in an unsecured position. Depending on what's going on in the world, why we're not making the distributions, you would have legal recourse that you could use with the promissory note. The fund has been around since 2009. We've never missed an interest payment since 2009. There's been a lot of up and downs in the economy during that time. We've never missed a distribution. We've always paid the 10% annual interest. We've always paid it on the last business day of each month. This fund, it has a great track record of 16 plus years. Scott also has $11.5 million that is kept on the private debt fund's balance sheet. He keeps it on there for the very reason, if we ever could not pay our investors, he would pull money out of that war chest to basically operate the business, to keep the business in the black, which would allow us to continue to pay the investors their money. It's just another safeguard that we have inside the fund. Scott, every single year for the private debt fund, what he does is he takes 50% of his profits, he pays taxes, and the other 50% he keeps in the fund and keeps it in the war chest for that specific reason. So again, also too, we are in that first lien position. If something were to happen in the economy, we do have an asset that we can try to recoup investment on. So there's a lot of different safeguards that we have. But to answer the question bluntly, yes, you could have legal recourse with the promissory note, but it is an unsecured position. Is a war chest in the PPM, or is it just an account set aside that can be used for any other reasons? No, it is on the balance sheet of the private debt fund and is used for that it's used as a safeguard for the actual private debt fund. Okay, next. Incentive alignment and questions. Okay. How does F Street get paid and when?
Yeah.
You touched on this already, but go ahead.
Yeah, so I've touched on this. So, generally we get paid once our investors are fully repaid along with the preferred return. So until that happens, F Street, we aren't making our split of the cash flow or sale proceeds or refinance proceeds until our investors are fully taken care of. And then we might make 35% of the cash flows where the investors are making 65 or 40 with us and 60 with the investors. Or in some deals it is 50-50. So again, it's all detailed in each specific investment package.
Yeah, and in the private debt fund, at any given point in time, we have 30 to 40 active loans that we're loaning out each month. We have 500 to 600 active loans in the fund at any point in time. As loans are being paid off and new loans are going out, obviously we're keeping the spread of the 5% and 5 points. What safeguards are in place to protect investor capital? I already talked about them. The war chest, we go in first lien position. We kind of talked about those all through the webinar already. How are F Street's incentives aligned with investors? Again, investors are getting paid first. The LPs are getting paid first. They're getting all of their initial capital back, all of their preferred return, and then F Street starts making its money on the actual deal by having the split of the 50-50 split or 35-65 split in the back end.
And to piggyback on that, we are an investor-fueled business. We are an investor-fueled company. The investors are our lifeblood.
Yes.
And we don't want one investment from each individual investor. Yep. We want to create a relationship with them that's going to go for 5, 10, 15 years and on. As long as F Street's here, we want our investors to be right by our side. So we want to be aligned as much as possible with them because we want our investors to be happy, healthy, and financially wealthy. So all of that's aligned for that long-term relationship.
Yep, that's a great point, Brian. Does F Street and its partners invest capital in the deal as well? Yes, our principals invest their own money into the deals. We have our own, like I said, I'm in industrial deals. I'm an employee here. I'm in our private debt fund. So our employees, our principals all invest in these deals as well. Process questions. What is the typical hold period for F Street deals? Again, for the private debt fund, it's 1 year. After 1 year, you take it back. For the equity deals,
it's all over the place. We just closed on the equity raise for a deal in Fort Madison, Iowa. We're projecting that to be a 14-month hold. There's other deals that we have that we want them to be we'll call it the redwoods of our money trees. We want these things to be around and cash flow and be lucrative for our investors for many years to come. So all over the board.
Very deal specific. And again, all of that's in the investment packet when those investment opportunities go out. How are deals sourced and underwritten?
Yeah, this is a great question. So we source these deals through, for an industrial deal, we use the brokerage community a lot. At F Street, we're focusing on multifamily development, industrial development, acquisitions here, acquisitions there. We're working with our investors. Brokers, they're doing one thing and one thing only. They're finding industrial opportunities for investors like us to buy. So we do leverage the brokerage community. We do have some of our own, call it grassroots efforts to find owners and find off-market opportunities as well. And then how are these deals underwritten? It's through our great investment associate Lane and really collectively through the whole team. And we're always happy to walk through our underwriting model and our assumptions with any investors. We try to be as transparent as possible on that front. But yeah, essentially we take the acquisition, the development budget, we try to cash flow, we try to look at the projected cash flows through the investment. And then we're always doing sensitivity analysis too. Yeah. What if the cash flow is a little bit lower? What if the refinance rate on our refinance loan a few years from now is lower? What if it's a higher rate? There's a lot of different factors that we're always looking at just to say, we never, say our performas and our models are 100% right because none of them ever are. Yeah. They are simply projections into the future with our best educated, not guesses, but our best
just backed up by data, historical data of what's happening in a market. And I think on the private debt fund side, again, we have about 300 to 400 loan applications coming in a month. We use social media as a marketing tool to try to bring borrowers in. We use brokers to bring borrowers in. We use our word of mouth, just our experience. Again, F Street's been around for 16 years. A lot of people know us. So we bring deals in on that end, and we do all the underwriting in-house. We have our own loan originators, property evaluators, underwriters on the private debt fund side. What makes F Street different from other real estate sponsors? Mitch and Brian. I mean, that is the biggest difference is they don't have Mitch and Brian, period. No, but we've got a really great team around us. It's honestly, we've got about 30 employees here at F Street. A lot of sharp individuals. Again, our principals, Scott, Josh, Nick, these guys are some of the sharpest guys I've ever met in my life. They really understand the market. They've been in real estate. Scott's been doing real estate since 2002. They've been very successful. I met Scott 10 years ago, and seeing where he was just 10 years ago to where he is today is just astonishing. He's developed a really good culture and environment. We have a lot of, even our office, it's an open door policy. We open books. If people want transparency, we're the group to give it to you. We'll provide financials, audited financials that we do every year. The investment packets are very transparent. But again, we've got a really good team around us. A lot of good energy. It's a lot of fun. And it's a great time to be in the real estate arena.
And I think another thing that, especially on the equity side of the business is we're really flexible. And we're willing to pivot at a moment's notice to say, hey, maybe these are the types of deals we should be looking for. We might be ultra focused on development for a few months. And then, industrial acquisitions start coming up, and now we're balancing the two. And then, other opportunities here and there come up. We're willing to look at every opportunity because we want to find the best opportunities for our investors. It doesn't necessarily have to be just through one avenue, one asset class, one geographical region. We're trying to find, a diverse set of investments for our investors. So we're always willing to pivot at a moment's notice, take a, fresh look at, any opportunities that come our way.
Yeah, so we have a question that came up that said, from the PDF, if there's $100 million in private loans outstanding, how much is being funded by investors and how much is being funded by a bank line? So yeah, so there is inside the private debt fund, there is a $50 million line of credit. Scott throttles that up and down as deal flow comes in because again, every single month we're paying off loans and we're getting new loans in. So as we need the funds off of the line of credit, Scott will throttle that up and down. And then also we'll use investor capital as well. So it's just it's a big managing game of a lot of money. And Scott does a lot of that to make sure that we're managing the money and making sure that the money is being used correctly. Yeah, I mean, again, if you guys are ever, we have a lot of investors across the nation, a lot of investors that are close to us. If you guys ever just want to come in and talk more, you come into the office. We're located in downtown Milwaukee. We love it when our investors come in. We just this past week had some investors in from out of state. It was a great time. We showed them a really good time. So if that ever is something that you're interested in, we're always here. The door is open. Come check us out. Come talk to Brian and I. Come talk to Scott, Josh, Nick, anyone. We're all open to be able to talk with you. And then if you're from out of state, maybe you can't do that, we're always open for a Zoom call so we can see each other face to face, a Google Meet call, or even a phone call. Whatever you guys want, we're here to provide for you.
Yeah, anything like that. We love having investors stop by. We also have, a few investor events throughout the year. So, always stay tuned for those. Those are great opportunities to, meet F Street and the team, meet some of our project partners, our general contractors, architects that we work with, and then also meet fellow investors that, may be from a different state or a different community. And maybe they've been investing with F Street for 10 years. Maybe they're, brand new. So you get to meet a lot of different people at those events. And we always like to have really just a great time and, get to know our investors as people.
Yeah. All right. So we went a little over today. We wanted to do this so that everyone could get some frequently asked questions and better understand what F Street is like. Again, if you have any additional questions or want to hop on a call or want to come into the office, you can reach me, Mitch Ferraro at F Street or Mitch at fstreet.com. Again, I'm the investor relations manager, and you can reach Brian.
Yeah, Brian, Brian at fstreet.com. Mitch and I are always around. We appreciate you guys, jumping on today and asking all the questions and being active in the chat. Yeah. This is one of our favorite avenues to reach out and to communicate with our investors is here on these Thursday roundtables at 11 a.m. Central. It's just, time flies when you're having fun. We went a little over time, but wouldn't want to do anything else.
That's right. All right, everyone. Thank you so much. Again, reach out to us if you need anything else.